Indian agriculture drives the national economy, yet for decades, the farmers powering this engine operated in a financial vacuum. They were sidelined by formal banking systems, forced to rely on high-interest informal lenders because reliable credit simply didn't reach the village level. NABARD, the National Bank for Agriculture and Rural Development, was designed as the apex institution to resolve these systemic credit gaps. It is important to clarify what NABARD is not. Unlike commercial banks, NABARD doesn't offer savings accounts or direct personal loans to the public. Instead, it functions as a refinance and developmental engine. It operates behind the scenes, providing the capital and regulatory support that allows local banks to function. For MPSC combined Group B and C aspirants, this distinction is critical. Exam questions target NABARD's specific history, its structural hierarchy, and its flagship schemes. Understanding NABARD is about more than memorizing a bank profile. It is about deconstructing the master architecture of India's rural economic inclusion. By 1979, the Reserve Bank of India struggled to manage its massive rural credit mandate. The sector was too vast for a single centralized authority. In response, the RBI formed the Krafikart Committee on March 30, 1979, led by B. Sivaraman, a former member of the Planning Commission. The committee's findings were clear. Rural development required a dedicated, standalone organization to provide pointed focus to credit-related issues. This led to the passage of the NABARD Act in 1981, setting the legal framework for a new kind of development bank. NABARD officially opened its doors on July 12, 1982. It began with a paid-up capital of 100 crore rupees, initially contributed equally by the Government of India and the RBI. The bank was built by extracting three specialized departments from the RBI: the Agricultural Credit Department, the Rural Planning and Credit Cell, and the Agricultural Refinance and Development Corporation. The institution was formally dedicated to the nation on November 5, 1982, by the late Prime Minister Indira Gandhi. NABARD didn't replace the RBI's authority. It took over its specialized rural mandate to ensure that agricultural development received undivided institutional attention. Today, NABARD is headquartered in Mumbai under Chairman Shaji KV. It is now 100% owned by the Government of India. Its mandate is executed through a trinity of operations: financial, developmental, and supervisory functions. The financial pillar is defined by the concept of refinance. In this system, NABARD doesn't lend to individuals. It refinances intermediate institutions like regional rural banks and cooperative banks with bulk funds. Those local banks then distribute these funds to the final beneficiaries, farmers and self-help groups at the village level. The developmental pillar focuses on building rural capacity. This includes supporting the microfinance sector and providing skill development programs for rural youth and artisans. The supervisory pillar contains a frequent exam trap. NABARD does not supervise commercial banks like the State Bank of India. Its supervisory power is strictly limited to regional rural banks and state or district cooperative banks. By acting as a wholesaler of credit and a strict supervisor, NABARD ensures local rural banks remain financially healthy and capable of serving the community. To understand NABARD's impact, we have to look at its flagship schemes, beginning with the Rural Infrastructure Development Fund, or RIDF, established in 1995-96. RIDF is funded through a unique mechanism. When commercial banks fail to meet their priority sector lending targets for agriculture, the shortfall is collected as a penalty and deposited into the RIDF. NABARD then uses these funds to finance state government projects, building the connectivity and irrigation systems that rural economies depend on. In 1992, NABARD launched the SHG Bank Linkage Program. This has since become the largest microfinance program in the world. It is now a core part of the DAY NRLM poverty alleviation strategy, allowing informal groups to access formal credit through their collective savings. In 1998, NABARD and the RBI designed the Kisan Credit Card, or KCC, to provide farmers with a standardized way to access crop loans. A modern update to the KCC has extended its tenure to 6 years, which better reflects the actual life cycle of long-duration crops. This chart displays credit performance as of March 2025. The 105% achievement rate validates the credit planning system. Contrasting targets, both cooperative and regional rural banks consistently met or exceeded their goals, facilitated by NABARD's refinance support. Through these three schemes, NABARD institutionalized rural credit, replacing the unstructured lending of previous decades with the data-driven systems now powering agricultural growth. These operations drive measurable macroeconomic shifts. By injecting capital into rural enterprises, NABARD enables employment generation in the non-farm sector. NABARD scales financial inclusion by integrating millions of unbanked citizens into the formal economy through the SHG and KCC networks. Infrastructure investments from the RIDF act as a multiplier. Better roads and storage facilities allow farmers to reach markets faster and reduce post-harvest waste. NABARD functions as the primary bridge between urban commercial centers and the rural agricultural economy, preventing the two from drifting into separate financial realities. Let's move into a rapid-fire revision to test the core concepts likely to appear in your next exam. Question 1. Which committee recommended the formation of NABARD? Answer: the B. Sivaraman Committee in 1979. Question 2. What is the establishment date and current ownership status? Answer: July 12, 1982, and it is 100% Government of India owned. Question 3. How is the RIDF funded? Answer: through the shortfall in priority sector lending from commercial banks. Question 4. Which banks does NABARD supervise? Answer: regional rural banks and cooperative banks only. Use this mind map to consolidate these dates and structural facts. Take a screenshot for your final revision. Precision in these institutional frameworks directly translates to success in the MPSC economics section. Like, share, and subscribe to keep your preparation on target.